Hi everyone and welcome to today's morning report. Chart appraisals on Thursday the 13th of October with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively negative start to the outlook on equity markets in the European trading session. We've had sort of three different factors really that are coming out play that are sort of driving negative sentiment today. We've had the Fed meeting minutes which showed that the Fed committee is sort of moving more towards a rate hike in December. Got the quote here, several members judged it would be appropriate basically to raise rates soon if economic developments basically are in line with expectations. So it seems as though that the Fed is moving towards a December rate hike. That sort of took a bit of the sheen off the market rally, and then subsequently we've had an oil price decline, and also we've had Chinese trade data which has come out overnight negatively. We saw the exports and imports both missing quite significantly on expectations. Look at those exports. Exports on Chinese trade basically are now back to levels last seen since February, and dropping. That's a negative, and it's driven negative sentiment, driven safe haven flows. The yen and gold are both positive today, but just on the back of that, you've seen the Aussie dollar, which is under pressure, which is a risk currency. So you've seen some flows out of equities as well across the European trades. Certainly we're seeing the DAX and the CAC under pressure. Now FTSE is outperforming, and that's due to the fact that sterling is falling away again, and that is helping that outperformance of FTSE 100, but certainly sentiment is pretty negative today at the moment. Now in terms of what we've got to look forward to today on the markets, on economic announcements, there isn't a great deal. We've got jobless claims and oil inventories really, and the jobless claims are expected to be 254,000, and that's basically in line with where we've seen the last few weeks really. And then the weekly crude oil inventories. Now this is interesting because it's created a lot of volatility in recent weeks. Usually we've had a load of drawdowns for the headline crude oil stocks, and that has been actually happening for the last 5 weeks in a row. But also watch out for the gasoline and distillates. Those have the ability to move markets as well. So lots of consideration on the EIA oil inventories. Now oil is currently down, but we could see a bit of a recovery if the crude oil stocks again show a surprise drawdown. So I wish you good luck in your trading today. Join me again soon for my Trader of the Year, FX Trader of the Year, Lucky 8 instruments, and I'll speak to you later. Thank you.